ठीक है. Okay. Now, these agencies perform similar role to Standard and Poor's and Moody's globally. So there in the world also there are a lot of rating agencies like Standard and Poor and Moody's. Okay. So there is something called Standard and Poor's, Moody's. They are international rating agencies. Okay. To assess the credit worthiness of the companies and their debt instruments. A higher rating, for example, will be AAA or A1 plus, implies lower default, and while lower ratings signal higher credit risk. अगर lower rating होगी तो higher credit risk है, higher risk है. So these ratings are crucial in bond pricing. You know, whenever the companies are going to issue bonds, debentures, okay. When the company is going to take loan from the bank, okay, loan negotiation. So you go to the bank and say, I want a loan. Bank says 12%, but you say that I've got a AAA rating, bhai. So they'll look at your rating and say, okay, sorry, 9%. So it will help you to basically negotiate the loan, okay. So investment decisions by mutual funds, banks and financial institutional investors also. So it's important. So we'll understand why this importance is there, okay. Now, let's now move on to some practical parts so that a lot of theory has been done. Okay. Fine. So, you know, the companies, all the companies need to be rated. Now, some companies don't have the rating because they don't go and take a loan, for example. They have taken loan in past, so they don't require the rating. They don't have a current rating, okay. So there is something called synthetic rating table, okay. There is a table, fine. So just have a look at view here. Suppose interest coverage ratio is more than 8, then indicative rating should be AAA. The company should have a AAA rating. Now, the rating agencies, they will, this is one of the very, very important parameter, okay. Of course, they look at some others also, fine. Maybe Reliance is having interest coverage ratio only 5, but they are still AAA rated, okay. So anyway, so AA rating is, the rating should be AAA, okay. Typical default spread 60 basis point. 60 basis point means the interest risk-free rate in India is 6%, 6.1% as we said, plus 0.6. So it will be 6.70. Suppose if I have a AAA rating, I go to the bank, then bank is going to charge me how much? The risk-free rate plus this spread. Okay. If the risk-free rate is say 6%, for example, what should be the bank should charge the loan at? What rate they should charge? 6.6. Suppose if I have a rating of say 3.2, suppose my interest coverage ratio is 3.2, okay, fine. Then what should be my rating? What should be my rating? The rating can range between A to BBB plus, fine, because when we see AAA, AA, single A and then BBB, okay. Now BBB plus जो होता है वो भी हो सकता है category. So the rating will range between A to BBB plus, fine. Suppose I go to the bank and my interest coverage ratio is say 3.5, okay, fine. So my rating would be A. If it is 3, then chances are my rating will be BBB plus. Is that okay? Fine. Now, so what will be, suppose my rating is 3.5, it is good. So what will be what will be the loan at interest rate will be the bank will be charging to me? Suppose the risk free rate is 6%, बताओ, risk free rate 6% है और मेरी interest coverage ratio 3.5 है, हाँ? 3.5 plus 6, 9.5, so don't need of calculator, okay, fine. Is that okay? So the cost of debt of a company whose interest coverage ratio is 3.5 should be 9.5%. Is that okay? Have you followed that? Have you followed? Should I explain again? दोबारा बताएं? Again. Now, one more example. Suppose my, interest coverage ratio is 2. Okay. Now, please raise your hand when you know the answer. If the rating is 2, then what would be my rating and what rate of interest I'll be charged for raising money. Okay, what will be my interest rate? Cost of debt. Okay, just raise your hand. Yeah. बता.
10 to 11%.
हाँ
10 to 11%.
हाँ मतलब 6, हाँ 6 अगर आपने कितना लिया 6 प्लस 4 तो 10 हो गया, हाँ 11 हो गया, ठीक है, you're right. Is that okay? Is that okay? Just have a look here. Just read this, Yashika.
Company with interest coverage ratio is equals to 3.0. The indicative rating is between BBB minus, that's lowest investment grade, and BB plus, highest sub-investment grade, depending on sector volatility, management credibility, additional leverage metrics, debt by EBITDA, DSCR, etc. Then typical default speed 300 to 350 basis points, 3% minus 3.5% over 10-year GSEC. Example calculation cost of debt. If GSEC yield is equal to 7.2%, pre-tax cost of debt is equal to 10.2% minus 10.7%.
Okay, fine. So I'll just explain a little bit. Please there. आप भी यहाँ आ जाओ, याशिका के साथ आ जाओ. This is very important, okay? So please listen. I don't want any disturbance, okay? Now there are certain ratios like interest coverage ratio, which is what is the formula for interest coverage ratio?
EBITDA by
Interest. Now there is another formula called debt upon EBITDA, okay? Debt upon EBITDA. So that means what is the debt percentage? Suppose your EBITDA is 1 crore and your debt is 2 crores, so the ratio will be 2. If the debt is 1 crore, sorry, debt is 50 lakh rupees and you are earning, your cash profit of the company is 1 crore. So which is better? A 50 lakh rupees divided by 1 crore EBITDA, you are having just, what your, loan is just 50% of the cash profit you are earning, okay? So that is better. If your loan is 2 crores and your EBITDA is 1 crore, that means the loan is equivalent to 2 years. So, the first case is better, isn't it? So the company will look into all these ratios, okay? The next is debt service credit ratio, okay? DSCR. Just Google DSCR. Just Google what is. इसको Google करो. What is the full form of DSCR? It is interest plus principal, okay? For example, before you, of course you can Google it. So basically it is, what is the full form of DSCR? Debt service coverage ratio, okay? How it is done? It is basically your earning divided by EMI, okay? Interest plus principal, how much you are going to pay and what is your earning. Suppose you are taking a loan from a bank. Your salary is 1 lakh, your EMIs, which is including interest as well as principal, is 25,000. So the debt coverage ratio will be 4. So bank is very comfortable with that coverage ratio because you are earning 4 times than money you have to pay to the bank, both in terms of principal as well as interest. So bank is going to look at various ratios, okay? What is your DSR ratio, debt service coverage ratio, debt to EBITDA, interest coverage ratio. So they are going to look into all kinds of ratios before they give you a rating, okay? Fine. So now the ratio has been calculated here, assuming it has been 7.2 is a GSEC rate, okay? Now, once you have calculated the cost of debt, okay, the next step is that you are going to take the benefit of the tax advantage. Very important, you are going to take the benefit of tax advantage because interest is an expense, okay? It is subject to deduction. You can claim it as an expense. It will reduce your, tax liability. It will going to reduce your tax liability. Whereas, if you take equity, you are going to pay dividend. Dividend is not tax deductible, okay, because it is an appropriation of profits. The dividend belongs to the shareholders. After the company has earned profit, it has paid its taxes. So whatever profit belongs to the shareholders, and from that profit, the company declares a dividend. So dividend is not tax deductible, whereas interest is tax deductible. Interest जो है खर्चा है कंपनी का, उससे टैक्स बेनिफिट मिलेगा. It will reduce its tax liability. So the next step is whatever is the cost of debt which you have calculated using the formula which we have just discussed, you are going to apply the tax benefit. Okay. So it is basically 1 minus the tax rate. 1 minus the tax rate. Suppose your company is paying 30% tax. Okay. 1 minus 30 will be 0.70. Okay. So 70% is your, so whatever is the cost of debt, उसका 70% आपका debt आ जाएगा, debt की cost आ जाएगी after taking the debt. Suppose, let me say, suppose suppose you go to the bank and bank is going to charge you 10% rate of interest. Okay. But your tax rate is 30%. Okay. So what will be the cost to the company? 10%, 9%, 8%, 7%. Suppose if I say that if you go to the bank and bank charges you 10% rate of interest on the loan and you are a businessman, okay, fine, and your tax rate is 30%. Okay. So what will be the cost of debt for your company? It will be 10%, it will be 9%, 8%, 7%. 7%. 7%. How? 1 minus t, 100 minus 30, so 70% of 10%, it comes to 7%. So that means जो आपकी कॉस्ट है वो सिर्फ 7% होगी, कंपनी की कॉस्ट सिर्फ 7 होगी, बाकी तो टैक्स की छूट मिल जाएगी आपको. I'll give you another example. Suppose the bank gives you a loan at 15%, and if your tax rate is 20%, so what is the cost to the company? What is the cost to the company? Simple mathematics. 15% का 80% हो गया ना, 12%. Is that okay? Is it 12%? No, another example and do it yourself. Suppose the bank charges you 16% and your tax rate is 30%. Okay. Suppose the bank is going to charge you what? How much? कितना बताया था मैंने? 16%. 16% बोला था? 15% बोला था. चलो, जो कितना रेट बोला था मैंने? 16. So the bank is charging you 16% and your tax rate is 30%. So what is the cost to the company? What is the cost to the company?
11.2%.
11.2%. Okay, fine. So that is how we calculate. Okay. हाँ break देते हैं. Just last before we go for the break. So just open that Excel sheet which I have shared with you. ये Excel sheet के बाद break है. Break.